All right, so Bitcoin getting pushed around by the bears right now. The crypto getting crushed, although not as much as it was. It was down nearly $7,000 earlier today. Not so much now. It's come back a bit. Still down 4,000. Not making much of that negative 10% move there for Bitcoin, but it was down 20% at one point and had lost overall $200 billion in market value in just 24 hours. Guggenheim partner Scott Minerd weighing in on Twitter earlier today saying, quote, Bitcoin's parabolic rise is unsustainable in the near term, vulnerable to a setback. The target technical upside of 35,000 has been exceeded. Time to take some money off the table. Scott will join us on this show later on this week. All right, so how could this impact all those retail investors and Bitcoin acolytes from jumping into Bitcoin mining, blockchain, and anything with those combination of words on the name? We got a couple-sided hit here. Joining us now is Lawrence Lewitton, managing markets editor at CoinDesk, and our own Kate Rooney as well. Kate, we'll get to your story in just a second. Lawrence, I want to follow up with you. What in the world is going on with Bitcoin? I know it's off its lows and the other cryptos. Why did they get just out of the blue, get smacked so hard today?
Well, you know, we have a whole bunch of issues involved. Of course, Minerd's comments didn't help. But, you know, we also have the dollar was stronger. It's hitting a 2-week high. If you look at the dollar index, we had miners were selling. And so, well, let's just get back to the dollar index. The dollar index rising, of course, that makes Bitcoin cheaper. There were higher interest rates. That, again, also hurts Bitcoin with the theory that Bitcoin is an inflation hedge. We had miners that were selling Bitcoin, and we're also looking at profit taking. We're seeing incredible amounts of volume on the CME. CME is an exchange, futures exchange that the institutions like to use. So that's pretty much it. There's a lot of profit taking today.
Yeah. Lawrence, one more quick one to you before we go to Kate. Are you hearing anything about Coinbase or other exchanges being down? Getting some people hitting me up on social media saying, I'm having some issues here, but what are you hearing?
Yeah, Coinbase had said something that, of course, is affecting potentially some of the indices that are based off of Coinbase, because there's something like a $350 differential between what Coinbase publishes in its price at the moment, or as it did a few minutes ago, and what the rest of the market was showing. That affects the futures markets, because that's how they price. But you know, this happens a lot in crypto when there's heavy amounts of volume. Sites like Coinbase and some of the other exchanges always have trouble. For some reason, it's either they're not ready for prime time, or they just can't handle the massive amounts of volume no matter what.
Well, that volume certainly has picked up. Lawrence Lewitton of CoinDesk. Lawrence, thank you very much. Now let's turn to Kate Rooney. And you know, Kate, listen, even with today's drop in Bitcoin, it started the year, or at one point in the year, was at 4,200. So it has been red hot. But Kate, it's not just been the coin, has it? It's been kind of anything crypto, Bitcoin, blockchain related has been getting bought up.
And that's seen as a sign of sort of this retail exuberance returning. We saw in December, if you look at Google Trends, searches for Bitcoin and blockchain are now way up. And the story really last year was the institutional investor getting in, and Google searches weren't as high, but we've seen in the past month a lot of these retail investors getting in. And like you mentioned, if you look at some of these blockchain names, not necessarily Bitcoin, but names like Marathon Patent, which is a crypto mining company, another company called Future FinTech. There's one called SOS Limited that does cryptocurrency and some sort of mining. It's a tech company. But all of these companies last week, rallied big time. You saw them up double digits. And according to Apex Clearing, those were 3 of the top 5 most traded names among retail investors. So you can see, similar to 2017 when we saw names like Overstock.com, which rebranded itself as sort of a crypto company versus an e-commerce company. That stock in 2017 really traded right alongside Bitcoin. And you had names like Long Island Blockchain, if you remember that, when they changed their name from an iced tea company to a blockchain company. So some of that same exuberance here.
Listen, I'm old enough to remember the internet bubble, Kate. I'm not saying that this is a bubble, but there are certain parts of it that sure smell it. Back in 99, 98, you just added .com or, God forbid, .net to your name and your valuation tripled. So, I mean, is that kind of the warning sign here for some of these are real businesses, but be careful, right? KateRooney.com?
KateRooney.com. That's it. Well, we looked at, you saw that institutional interest, and like I mentioned, Google Trends. You didn't see that exuberance, and you didn't see that fervor around names like blockchain. But in the past month, we have seen that, and I think it was, analysts had said it was only a matter of time before you saw at least some level of selling. Once it hit 40,000, folks are saying that really was a sign that folks were moving to take money off the table, and this retail resurgence. So I think there are some bubble-like characteristics, and you have a lot of these pro investors, Bill Miller last week even saying, it will be volatile in the next couple of years, but that is sort of what it takes for these long-term gains.
Yeah, be careful. It could be like a ticker, one letter off, and it goes up 400% in a day. Blockchain Rooney, we appreciate your time today. Thank you very much. Take care.